CFRA Research Chief Investment Strategist Sam Stovall is with us, has a 24 S&P target of 49.40. Sam, it's good to see you again. Good morning.
Morning, Carl. Good to see you.
I wonder, you make the point that if S&P manages to notch an all-time high, there might be a little momentum on the upside rather than the downside.
Absolutely. History would basically tell you, but obviously not guarantee, that when we do end up hitting a new all-time high and recover everything we lost from the prior bear market, that there's a greater likelihood of a 5% advance than there is a 5% decline, and that essentially we have seen every move above that prior bear market level to be positive. In a sense, you know, it's not as if we then just turned right around immediately and ended up selling off.
You think the market right now is leaning too much on multiples, or can earnings ratify this good mood next year?
Well, prices lead fundamentals, and right now I believe that prices are leading fundamentals. We're looking for earnings about 243 for the S&P 500 in 2024. We are at about 20 times forward earnings, which is seem a bit pricey if you go back 20 years, which is more like a 17 multiple. But the interest rate environment is still such that with the prospect of lower rates, that is actually holding up the multiple, in my opinion.
You know, you look at a chart, say like a 2-year chart of the Russell, Sam, it just keeps trying to get over 2,000. 4 times it's been rebuffed. I wonder what do you think it takes to move past that?
Well, I think it will move past that. Mark Arbiter, who used to be the chief technician at S&P, used to say that large round numbers serve as a rusty door and require several attempts before finally swinging open. And I think that's the case with the Russell. But if you look at small caps, and in this case, the S&P Small Cap 600, it's trading at about a 35% discount to its relative average PE over the last 20 years. So knowing that mid and small cap stocks have underperformed large caps in 8 of the last 10 years, both are trading at more than 30% relative PE discounts, and with the prospect that the Fed will not be raising rates and will soon be cutting rates, I think that would end up providing that impetus to allow the Russell to break to that, above that resistance level.
Which sectors do you think are best positioned? So if you like the Russell, does that mean you like financials, materials, more cyclical sectors?
Hey, Sarah. Yes, actually, Lowry Research, which is CFRA's technical arm, just recently put out a note talking about industrials and how on an intermediate and a short-term basis they have seen above average performance in terms of their power ratings, and areas such as industrial machinery, building products look very strong. But also with the financial side, you're looking at regional banks, asset managers, and consumer finance that are showing strong power ratings as well as strong CFRA stars, our fundamental side.
Hey, finally, Sam, you might have heard right before we came to you, we were quoting some of the House View over at J.P. Morgan and sort of the boil the frog scenario, the geopolitical concerns. Does that temper your 24 target? Would it be even higher given some frictions not existing right now?
Well, Perry Mason would say you're trying to lead the witness here, Carl, but I would actually agree with you that that the number 49.40 was selected mainly because I use our analyst target price differentials over the coming year, also take a look at point and figure numbers to come up with a target, but also realizing that 5,000 is a very strong resistance level, and with a lot of headwinds around us, that it could end up causing us to pause for a while and digest these gains. But I think that eventually we will be seeing a strong 2024. Let's remember, every first-term president up for re-election has seen the market advance by double digits and never decline since World War II.